Governments are making meaningful environmental commitments. Society wants a low-carbon economy, and green technologies can make it happen, but only with the support of large-scale financing from the private sector. Bank of America Merrill Lynch, who kick-started the rapid global growth of green bonds, knows that innovation and expertise are also necessary to help clients successfully diversify their energy mix and continue moving green technologies into the mainstream.
The flowers are blooming in the mild autumn air, but the effects of global warming aren't so benign everywhere. The race is on to limit the rise in the Earth's temperature to 2 degrees above pre-industrial levels. And since the UN climate change conference known as COP21 in Paris in 2015, this commitment is binding on the 195 countries that signed. It's led to a surge in green projects, which all need financing.
If you put your climate bifocals on, you get a sense that the long-term direction of travel is now set in stone. There is a cap on emissions. The Paris Agreement has a ratchet which will likely tighten over time. So companies are tuning in to that reality that there's a need to recalibrate some business models.
Bank of America Merrill Lynch has carved out a niche in green finance as part of its vision to back sustainable growth globally. It's particularly active in green bonds, where investors lend money to issuers for a fixed period in return for interest. But are they a good investment?
The beauty of the green bonds that we're working on, which are what we call use of proceeds green bonds, is that they are identical from a credit and a yield standpoint to the investor. So that means all of the regular investors that would normally buy a regular bond from that issuer can buy the green bond, and they do buy the green bond. But we also have this growing groundswell of green investors that specifically want to buy the bond because the proceeds are going to green projects.
In the energy sector, the bank is starting to see all stakeholders, regulators, consumers, corporations and politicians wanting to move towards green energy. It's predicted $70 trillion are needed to finance clean technologies by 2040 to meet global climate change commitments. Oil and gas companies are shifting their business models, but they need to do more.
If you look at what all the oil companies are doing, they're putting some of their best people, setting up divisions to start to work that. It's probably on a 10-year view from now. I actually think the critical thing is for that to come forward, because otherwise I think with technologies keep accelerating the time at which that crossover happens, you're going to be, if you're not careful, trying to affect that transition too late from a global standpoint.
Bank of America Merrill Lynch has set aside $125 billion over 10 years for low-carbon investments, such as this initiative with Clean Star, which helped people in Mozambique move from cooking with charcoal to clean fuel. The bank is also part of the new Catalytic Finance Initiative, a consortium investing in sustainable projects. So who else is investing? The emerging markets, and the number one issuer of green bonds is China. But it still isn't enough.
Annual investments in clean tech is already somewhere between $130 to $325 billion annually, and we're seeing very comparable numbers for efficiency. And for each, this is roughly 5 times where we were investing in around 10 years ago. But with that said, the investment gap that we still face for the 2-degree trajectory is somewhere between $650 to $860 billion annually between now and 2030.
Huge gap.
Huge gap.
The Governor of the Bank of England, Mark Carney, has weighed in support of green bonds, saying that green finance can't conceivably remain a niche interest in the medium term. And what needs to happen to grow the market is better standardization and disclosure of what the money is spent on.
To me, it's just a kind of obvious financial decision. For example, Transport for London, they've issued a green bond because they know that there's an increasing amount of Londoners that need to be transported from one side of the city to another. So they're looking at ways to increase usage, more efficiency. It just seems to be an obvious economic decision to be more creative with the resources that you use.
As green finance becomes mainstream, Bank of America Merrill Lynch is leading the charge to transition the world to a sustainable low-carbon economy.